Using AI to learn things is cool. Using it to run a business, even better. But using AI to actually make money, build wealth, invest smarter, and grow your portfolio while you sleep, now that can be generally life-changing. And that's exactly why scammers have hijacked the idea. Right now, the phrase AI trading has become the most dangerous marketing term in investing. The CFTC said it straight. Don't believe the scammers. AI technology can't predict the future or sudden market changes. And in December 2025, the SEC charged a network that stole over 14 million from regular people using fake AI signals. The platform looked real, the signals looked real, but none of it was. I'm Manny Gashi, and in this video, I'm going to break down the exact playbook these scammers use so that you can spot them in 60 seconds. The difference between real AI and fake AI in trading, because most platforms are lying about what they actually do. And third, what AI can legitimately do for your investing that nobody selling $1,000 courses wants you to know. Before I show you the cases, I want you to understand the psychology, because every AI trading scam runs the same playbook. It works in 3 stages. Stage 1, the hook. They find you on social media, TikTok, Instagram, YouTube ads. They promise something that sounds almost reasonable. AI-powered signals, automated passive income, let the algorithm do the work. It's not get rich overnight, it's get rich smarter. And that's what makes it believable. Stage 2, the trust build. They move you off the public platform into WhatsApp groups, Telegram channels, private Discord servers. Inside, you see other investors sharing wins, screenshots of profits, testimonials. What you don't know is that those people are fake. Those screenshots are fabricated. The whole group is manufactured trust. Stage 3, the trap. Once you believe, they point you to a trading platform. It looks legitimate. Professional design, charts, balances, updating in real time. You deposit money, you see profits accumulating on screen, then you try to withdraw. And suddenly there's a tax, a verification fee, a security hold. That's when people realize the platform is fake, the profits were fake, and the money is gone. This isn't theory. This is exactly what the SEC charged in December 2025. 7 entities allegedly stole over 14 million using this exact playbook. One victim wired over 1 million across 7 separate transactions, all routed overseas, gone. So how do you protect yourself? Here's the 60-second test I want you to memorize. Three red flags that tell you to walk away. Red flag 1, they rush you off platform. If someone slides into your DMs and immediately pushes you to WhatsApp or Telegram, that's not convenience, that's isolation. They want you away from public accountability. Red flag 2, unverifiable proof. Screenshots of wins, charts showing gains, testimonials from members. Ask yourself, can I independently verify any of this? Can I see their trade history on a real exchange? If the only proof exists inside their closed ecosystem, it's not proof, it's theatre. Red flag 3, withdrawal friction. The moment you try to take money out, there's a fee, a tax, a verification payment. You're not withdrawing from a platform, you're being squeezed for the last dollar they can extract. If you see 2 of these, don't invest, leave. Now, that SEC case is brutal enough, but the next one is even more crazy because it's happening right here on YouTube. Sentinel Labs, a cybersecurity research firm, published a report on a scam that's been running since early 2024. People were watching YouTube tutorials thinking they're learning to deploy an Ethereum arbitrage bot, but what they're actually doing? Deploying a malicious smart contract that drained their wallets. And the distribution is genius in the worst way. The scammers used aged YouTube accounts, channels that have been posting random content for years, so they look established. They curated the comments, deleted anything negative, and flooded it with fake positive comments. Some of the videos are even AI generated. Synthetic voices, slightly off facial movements, because generative AI makes it cheap to mass produce trust. The CFTC is warning that AI isn't just being used for trading, it's also now being used to make scams look professional. Sentinel Labs tracked one attacker wallet pulling 245 ETH from that scam. That's over 900,000 from one YouTube video. So when you think, how are people still falling for this? That's why. The scam isn't just the pitch, the scam is the illusion. So when someone says, I saw a bot tutorial on YouTube, don't be impressed, be skeptical. And it's not just anonymous scammers. Celebrity endorsements run the same psychology. Borrowed trust. In 2021, the SEC charged Kim Kardashian for promoting Ethereum Max to her 225 million followers without properly disclosing she was paid $250,000 to post it. She settled for $1.2 million, and by 2022, the crypto coin had lost 95% of its value. The SEC chair's message was clear. Just because someone famous promotes it doesn't mean it's right for you. The translation? Don't outsource your brain to a follow account. But here's the thing. Even if you dodge the outright scams, there's a bigger problem. Most things marketed as AI trading aren't actually AI. So the question also becomes, if most AI trading is fake, is there anything real? Yes, but you have to know what you're looking at. When someone says AI trading, there are actually 3 different things that could mean, and one of them is being falsely advertised. Type 1, rule-based automation. This is what most platforms are actually selling you. Grid bots, DCA bots, indicator triggers. Here's how a grid bot works. You set a price range, say Bitcoin between 90k and 100k. The bot places buy orders every $500 on the way down and sell orders every $500 on the way up. Price bounces around, bot captures the spread. Simple. Is it useful? Yes. In sideways markets, it can work. Is it AI? Absolutely not. It's an if-then statement. If price hits X, do Y. You could build this in a spreadsheet. But platforms call it AI-powered because that lets them charge more and sound impressive. It's not intelligence, it's marketing. Type 2, statistical machine learning. This is where things get real, and where the gap between Wall Street and retail is massive. Statistical ML means training models on historical data to detect patterns and estimate probabilities. The model looks at thousands of data points, price, action, volatility, correlations, and learns which combinations tend to predict certain outcomes. Hedge funds have been doing this for decades. They have teams of PhDs, petabytes of data, and infrastructure that costs millions to maintain. So, can retail investors use ML? Yes. But it requires honest backtesting, proper data pipelines, and an understanding that the model gives you probabilities, not certainties. So the difference is that real ML adapts. It learns, it can update. A rule-based bot does the same thing forever, whether it's working or not. Type 3, language-based AI. This includes sentiment analysis, models that scan X, Reddit, and news to gauge crowd mood, and generative AI, like ChatGPT and Claude. Sentiment can be a useful input. If fear is spiking on social media, maybe it's a selling opportunity, but it's one signal, not a strategy. Markets stay irrational longer than sentiment models stay accurate. Generative AI is different. It's incredible at explaining, summarizing, and coaching, but it cannot predict prices. This AI is trained on language patterns, not market patterns. The CFTC said it clearly, AI cannot predict the future. So where do these things help? In giving you understanding, discipline, and learning. They're not crystal balls. So if most AI trading is fake, what can you actually do? You can learn to spot the scams and understand what AI can and can't do, and build real skills instead of chasing shortcuts. That's what this channel is about, and that's exactly what I'm trying to build. A system using real machine learning, risk management, and full transparency to maximize attainable profits and win rate through AI. But I'm not going to show you fake screenshots of something that isn't finished. Instead, I'm going to build it in public, show you what works, what doesn't, and put real money on the line. If that sounds better than rented Lambos and signal groups, please subscribe. And in the next video, we're going to cover the #1 reason traders lose money. And it's not what you think it is. I'm Manigashi, and I'll see you in the next one.